Welcome to the GoPROcast, where we invite business doers who are changing lives by sharing their stories, their strategies and tactics, and who bravely talk about their failures that actually led to their biggest successes. Now it's time to Go Pro with Jeremy Torres. Today's guest is a certified financial planner, a 3-time #1 best-selling author, and the owner of Lake Growth Financial Services, a financial firm in Chicago, Illinois. Mark works with people who want to grow their business in ways that are safe and predictable to become their own source of financing and create tax-free income for retirement. Please welcome to the GoPROcast, Mark Willis. Hey, buddy. Welcome to the show.
Jeremy, I love the audience applause. That's maybe a first. I love that. Very cool.
Yeah, actually, we have a live studio on just behind the camera, so you can't see them. But David, they were waiting for you.
That's right. Well, wherever you go, having a ready-to-go applause, that just makes your day that much more exciting.
Yeah, it's like remember, I think it was Starsky and Hutch. They had their own backup music, or "I'm Going to Get You, Sucker." One of those movies.
Love it. Well, glad to be on the show.
Well, thanks for having us. And really, we only start with we started every show the same way, and we only ask the same question here, and that is to ask you to tell us something good.
Well, something good is hard to come by these days, but I would say that life has a way of making it. The old Jurassic Park comment, life finds a way. That is so true.
Yeah.
And I'll also say that the human experience has this really cool phenomenon where we actually get better under stress, a certain amount of stress. Now, you push us too far, I guess anything will break. But if you know how to do it right, you can actually get better under stress. And there's actually a medical term for this. It's called hormesis. And the idea there is you get better under stress. Think about a workout. You're basically ripping your body apart, but as a result of that, you grow back stronger.
Yeah.
So guys, don't be afraid of good stress. Up to a certain point, you can actually get better as a result.
I think that would be akin to all growth happens in the uncomfortable, right? So if you're pushing yourself to be uncomfortable, learning new skills, talking to new people, actually even talking to people. The first time I did this show 50 times ago, Amber Hurdle was my guest, and every time she gave me an answer, I was down here writing the notes. Taking notes. Half the interview is me asking her a question, and the other half is me down here writing notes. And I was like, oh, God, I look like a moron. But I threw it out anyway. Like, that's what you do. You just put it out there, and the next one is a little better. We say around here 1% better. That's all we try to be every day.
That's great.
So speaking of 1% better, you had quite a little arc there. So you're really into finances. How did you get into finances and then into becoming an author? And so I want to kind of see how those two things play together. But what was your background before you started knowing everything and you wanted to share what you know about money and how it can help you?
I certainly didn't get given this information at birth, that's for sure.
No one is.
And nobody in public schooling really gave you much education. Didn't give me much public education in terms of financial planning or education. And there was no such thing as YouTube when I was going through college and becoming a young adult really either. So it was sort of a different world, let's say. I'd say that there's a big problem, though, on the other side of the equation where you've got too many money gurus out there. You can also have that. You can fall off that side of the horse, too. But to answer your question, Jeremy, it was a long time coming, and it started in the midst of desperation. My first real connection to the financial universe was signing away my life to a bunch of student loans, and then graduating several years later with 2 private school degrees, another one with my wife. So we had three private school degrees and $120,000 of student loan debt. Fast forward to today's dollars, that'd be about $250,000 of debt with no plan to pay it off.
Yeah.
And, in the midst of the Great Recession of 2008 and no jobs really, because we had gotten non-marketable degrees, let's say. So it was a big wake-up call.
Your degrees were not in finance then, back then?
No, not at all.
Wow.
Yeah, no, we had...
Holy moly.
We had jobs that didn't exactly lend themselves to employment in the midst of the Great Recession.
Boom.
Or degrees, I should say, that didn't lend themselves to employment.
Yeah.
So, but Sally Mae was knocking on our door quite literally.
Yeah.
And
Oh,
we had to find a way to do it. So we just, batched it. We got as much as we could done with multiple jobs and side gigs and everything we could do.
so yeah, Dave Ramsey is kind of one guy that I always send my kids to and who I went through to when I had my money issues, and that's just rice and beans and beans and rice. The only time you should see inside of a restaurant is if you're working in there.
That's right.
Get out of debt,
That's you got his words down. That's exactly right. And we followed his plan, and it is what got us at least aware of our money. And so I'll always be grateful to him for that. Since then, we've stumbled across some strategies that were so good we couldn't keep them a secret.
Good.
And we ended up starting a financial firm that builds themselves around our specialties and these strategies, and help folks get.
Could you give us a tip for some of those? Let's break out some of those useful tips here to the audience. And how did you come across them?
Well, I was sitting down with my former professor in college, and I think he just felt bad for me because he had helped contribute to the problem. Great man. But he had come to visit my wife and I, and he sat me in a room. And actually, it relates to Dave Ramsey a bit. Because I was a full fanboy, envelopes in the wallet, I listened to the guy's radio show every day, and we were knocking out that student loan debt. But, it's sort of like that sugar high feeling, when you eat a bunch of cake or whatever, and then you have that crash afterwards. That's sort of how it felt to be paying all this money. We were throwing thousands of dollars extra to our student loans every month, and we had wiped out a good chunk of it. But we were in our mid to late 20s, and I knew somewhere inside me that these were the most valuable dollars I'd ever have in my life, and I was throwing them down a hole, right? Because every dollar you spend is a dollar you'll never see grow ever again.
And at that age, it has the most time to grow.
That's right. And so whether you're 27 or 57 or 87, today's money is worth more than tomorrow's money.
Right.
It's a concept of opportunity cost. I didn't have that concept in mind, but I knew something was wrong with that picture. And anyway, my professor sat us down. He said, Mark, he looked me right in the eye and he said, Mark, is it possible Dave Ramsey could be wrong about something?
Uh-oh.
Heresy.
Maybe
right,
little, I don't know. Okay.
Yeah.
Hold on.
And mind blown. Yeah. Oh, and you've even got the Matrix going there. That's great.
Yeah, you set the walls on fire with that one, boy.
That's right.
So, and I kind of get what you're talking about. Everything in moderation, right? Mm-hmm. So if you follow a little bit of Dave and you're getting out of debt, but you happen to actually have someone in your life that explains the sixth wonder of the world or the seventh wonder of the world, which is compound interest, right? And you go, okay, maybe it's okay to not pay that off as fast as long as I am putting something away in a place that can grow. Is that kind of the gist?
That's it. And that's the trouble that most people have, Jeremy. Mark, they say to me, Mark, over Zoom or over the phone, we meet with folks all over the country, and they say to me, Mark, I know I need to be saving for the future, but I got all this debt from my past. I need the future. I got to get rid of the past. And it's a conundrum a lot of folks live in.
Yeah.
Should I be saving for my future or pay off my past? So we had to figure out a better way. And my professor, he brought this idea to me. He said, Mark, what if there was something better than being debt-free? What if you could actually not just pay off your debts, but be the bank? What if you could bank on yourself? Yeah, that was my Matrix moment. That was like the red pill moment. To think like a banker and to do what banks do was a big wake-up call for me. In fact, he said, Mark, don't do what banks are telling you to do with your money. Instead, look at what they're doing with their cash and go do that instead.
Yeah.
And I don't know about you, but my bank doesn't, put a lot of money in savings accounts and CDs.
No.
Right? They're
put it
lending
in your
that
pocket.
money out.
Yeah. At a really high interest rate or at interest rate. I don't know if that's you or me.
No, that's right. Yeah. So the idea is, Jeremy, maybe you put 10 grand into a savings account at the local bank. And what do you think they're going to do with that? Are they going to leave it in the vault there at the bank? Of course not. They're going to loan it out to the guy behind you in line. And they're going to pay you 0 interest. And then they're going to charge the guy behind you in line 10, 20%, whatever the interest rates are going at.
Yeah.
So anyway, we really had to find a better way than just using cash to pay off our debts. And for a lot of folks, that's where it stopped. Hey, well, we'll just be debt free. We'll be 4 or 5 years older, and then we'll start saving. But I wanted to begin building my assets and getting ready for retirement. Even while I was paying off my debt, I wanted to not just start at the starting line of my life in my mid to late 30s. I wanted to be along the journey, earning and compounding wealth. So that's kind of where the trouble spot was. And when he said, Mark, you can bank on yourself, he had to explain what he meant by that. And again, I have to stop and say I was a certified financial planner and was digging into concepts of investing and real estate. And so when he told me that of all things in the universe, financially speaking, dividend paying whole life insurance can help you act like a bank for yourself, that's when he said, Mark, Dave Ramsey might be wrong.
Okay.
Because that was of course one of Dave Ramsey's big comments is hey, all whole life is terrible and never touch it. Yeah. And he's right. Dave is right about most whole life. But when I got into it, and again, as a certified financial planner, I had to really scour this, and it took me about 7 months to wrap my brain around it. But I realized at some point in the research that if you can construct the policy, the life insurance policy, for cash value and not commissions, you can build a ton of money inside of all things, a whole life policy, and then you can borrow against it like a bank, and the policy will continue to grow as if you had not borrowed the money. So let's say, for example, I got a $20,000 student loan, let's say, and let's say I'm plowing money into my whole life policy and I'm keeping my minimum payments going to old Sally Mae.
Okay.
All right. So my student loans are slowly coming down while my cash value is just ramping up super fast because we built it lean and efficient and low in commissions. And we shrink that death benefit down as hard as we can. And we're flooding that policy with as much wealth as we can. It's almost like overpaying on your mortgage, if you will.
Okay.
So you're flooding that thing with equity. And so the whole life policy is growing while the student loan is slowly coming down. At some point, not too far in the distant future, after we started our policies, we started borrowing from our policy to wipe out all of our student loans. Meanwhile, our asset, the whole life cash value, was still growing as if we had never touched that cash, as if there was no loan against it.
Because there's no penalty unless somebody dies.
That's right. Yeah.
Don't die, you won't get penalized.
That's the ultimate penalty, right? So, so if I want to repay that loan to my policy, I'm in control. I get to pay $100 a month or nothing, or I can throw $3,000 a year at it, whatever I want to do.
Yeah.
But if I pass away and never pay off the loan, it'll just be deducted from my $1 million death benefit when I pass away, right?
But let me ask you this. Would you not suggest doing that, or what would be the cutoff as to the type of loan you're trying to pay off? Because if it is a higher interest, let's say it's a car loan at 5% or a credit card loan debt at 18%. And let's say they're both 30, let's say $20,000. One person's got the Sally with $20,000 school debt, and the other person's got a car loan with 8%, and the person that B or C has $20,000 with 15% annual, and they all make the same money. Which ones would you say? Obviously, the school, because that's very low interest, if not maybe 1% or zero. But the other two, what would be the contributing factors of the go, no go to do something like that?
Well, you bring up a great point, and you want to think about, the fancy word here is arbitrage. You want to think about how much does this policy continue to grow for me, even as I borrow against it, relative to how much is going out the door to the loan sharks or whoever they are. So you're right. At some point, there's probably a flip
diminishing
switch there.
Yeah.
Now, I'll tell you a quick story. We had somebody who's a business owner. He's got a very successful painting, like house painting business. Runs a couple million in revenue every year. Great guy, small business, couple of employees. And he was paying out the nose to these loan sharks, your Cabbages and these sorts of high interest lines of credit to businesses, right? He was paying $30,000 a year just on the interest payments.
Wow.
Not to mention the principal and all that. So, that was $4 or $5 a month all in on his debt payments, including interest and principal. So he looked at his life insurance policies that we had set up for him. And he said, well, Mark, I got all this money sitting in my savings account right here, and I'm just going to dump it into my policy. $100,000 plus goes into his policy. And then he immediately, within 30 days, borrows that money out and wipes out all of his creditors. So even a high interest debt could be paid off in 30 days and that's worth it. That's worth
Yeah,
it.
yeah.
You know,
Of course, yeah.
but
For waiting a small time like that, 30 days or 2 months to get to hit take the extra hit on the finance charges. But to your point too, just because you have $1 million payout doesn't mean that your whole life is going to have $1 million, or you can't take $1 million. You can only take what you have put in.
that's right. Yeah, your
Borrow
death
against
benefit is for your family. That's right. Yeah.
What's the percentage that you can borrow against on the principal that you put in typically?
Well, you're packing money into this policy, right? So you can always access about 90% of your
geez, that's a
equity.
lot. Okay.
Yeah, of your cash value. Correct.
Okay.
So if you got 100 grand of cash value, you can borrow about 90 grand for any purpose, and that could be to take your kid to college, or invest in your business, or invest in some real estate, whatever you want.
So tell us about how you come up with this, and how do you start getting the word out? Is that where the books and the websites? I just kind of wanted to share some of this with the folks. This is the website, notyouravage.nm.
Yeah, oh yeah, yeah. You're looking at our membership site. So this is actually a fun marketing project that we've been trying lately. Notyouravage.m as in Mike, n as in November.co. Notyouravage.mn.co. That's our membership site, free to the public. Anyone who listens to my podcast, which is notyouravagefinancialpodcast.com. If you go to notyouravagefinancialpodcast.com, you'll find all of our other sites, including the one you're showing us right now, Jeremy. But you get into this site, and it's a private, off of Facebook membership site. So it's not bound to Mark Zuckerberg and his cronies. It's essentially a free discussion site where you can meet 1,000+ other people. Close to 1,000 people who are clients of mine, who are already doing the bank on yourself concept that I just described. And they're doing it with all things, including real estate, paying off their debt, and more.
Gosh, that's great. And then so this is the other website that I'm having here, is the growth. That's the lakegrowth.com. Is that that's the company website then?
That's right. Yeah. Lakegrowth.com, LAKEGROWTH. And our focus is more than just this one strategy. Certainly it's one of the things we specialize in. But if you scroll down just a bit more, you'll show folks all the other pieces of that puzzle, including estate planning, retirement solutions, IRA rollovers, education and college funding strategies, business succession. We just helped a really wonderful business out on the East Coast do a buy sell where they're working on a $10+ million transition with their heirs. So
yeah, that's the
cool
business. I love that. And the estate planning is probably one of the most people overlook, especially when they start getting in the kids are getting into high school, and probably going to start downsizing in their house, and they're going to have some equity, and they got to watch what they do there. And then the last one I want to show is just your LinkedIn, because I'm a huge LinkedIn guy. So your LinkedIn is just LinkedIn /Mark Lake Growth, and that's how they get a hold of you and message you. Well, what's the deal with the airplanes? Are we a pilot? Or are we just a big fan?
Well, there's two things to it, and I'll give you just one more website if you want to share one more. I don't like flooding people with URLs, but I'll put it in the chat there. I had a chance to fly that airplane right past downtown Chicago, all the skylines and everything. I live in Chicagoland. And so my buddy was doing his pilot license, and I split the fuel cost, and he let me go up on the flight with him. And he said, "Here, Mark, here's take control, here you go." And so it was a lot of fun, but I always talk about how your financial life is not in a vacuum. It's in an environment, just like that airplane was flying in an environment with headwinds and tailwinds.
Yes.
Let's talk about a story here really quick, and I'll keep it brief. Have a guy who's a doctor, makes great income. When he first sat down with me, he was very proud of his mutual funds, getting 9, 12, 11% a year, right? Feeling good about it.
Yeah.
In his 401k, of course. So at the same time, however, we started getting into his mortgages and his boat and his credit cards. He was spending about a third of his income, almost 80 grand a year, going just to service all of his debts. So that's like a third of his income. Think about that. If time is money, what's a third of your day, So he was getting a 300 mile an hour headwind coming at him with a 90 or 100 mile an hour tailwind behind it. He was getting pushed backwards. No matter how hard that little airplane was going to fly, the wind was getting pushed right in his face, and he was flying in the opposite direction. So airplanes flying in an environment. Your money is always in an environment. And I've got a little fish in my kitchen over there. My daughter and I feed it every day. We have to keep the temperature just the right environment. If we mess with that environment, that fish is dead, right?
Right.
And I'll just say this. I believe firmly that who controls the banking function in your life
Yeah.
will be the one that controls the environment where your money lives.
Yeah. So don't
And
try this at home. Use a
exactly.
professional.
Yeah. That's right. You got to make sure that you're the banker in your life. It matters more who the banker is than say who is the, how'd your mutual funds do last year, for sure.
Right. So this is the other page that you sent me. It's go ahead and read it because it's small for me.
Yeah, notyouraverageFinancialPodcast.com is the redirect. NotyouraverageFinancialPodcast.com.
Beautiful.
We're Not Your Average Financial Podcast. And you click on request a meeting. You can say a quick hello to me, or you can listen to any more of our 200 plus episodes on this strategy or other similar strategies like I've described today.
Great. Well, I love the detail too that you put in that in the episode too, so people know what they're getting. I try to do that. I try to do it by myself. I have somebody else who helps me, but they're not quite as good as kind of hearing my voice and guessing what you said that people want to hear. So the breakdown I still do myself, but that's pretty impressive. You must put a lot of time or money or both into this. So it looks like it's really good stuff. And I suggest that everyone listening to this, go to your sites. And I'm going to put all those links, of course, in below this video for the YouTube channel and the podcast channels, so we can check it all out. In the few minutes we have left here, let us know about your books. How did you become an author? What was that process like? Because I've written a book in a chapter myself, and it was a unique experience. Very few people make it through to the other side of publishing. How did that work for you?
It's been a real journey for sure. And I think it's one of the best opportunities in our world today. 25 years ago, we basically had a couple of publishing houses that controlled the whole thing. And now we've got this incredible long tail where almost anyone can write a book. But more importantly, if you've got something important to say and you've got the patience to sit down and write, and to think critically about it and have people give you feedback.
Yeah.
I mean, it's a bear for sure, Jeremy. But I'll tell you this. I think when you've written a book, you have the capacity to say, all right, hey guys, I'm at least sticking around long enough to serve you for years to come.
Yeah.
I think the fly-by-nights are going to be here and then gone again.
Mm-hmm.
But if you put your thought, blood, sweat, and tears into writing a book, you're going to be just fine. Now, the title of our books, the books that I've had the privilege of writing, The Secret to Lifetime Financial Security, and how to be an Amazon legend and fire your banker, and then Real Estate Investing for Women. All three of those address a different market, a different people group, you might say.
Yeah.
And for business owners, I'd definitely say just check out the How to Be an Amazon Legend and Fire Your Banker. Even if you're not into e-commerce, it's a great book on inventory management and, again, banking on yourself.
So one of the things I want to touch on, because it's my show and I get to do that, is because it's interesting to me, because my wife is a real estate broker and she's a damn good one, probably the best in South Florida when it comes to paying attention to the client and getting a deal done. She does more than most people do, let alone just realtor agents. I'm also an agent, but I'm her chauffeur, right? Because I do a lot of other things here. And we like investing. Your book about real estate for investing for women. What is the differentiator or the crux of that book to say, hey, ladies, this is for you? Can you touch on that one?
Well, you and I both have, sounds like you and I both married up. All the websites
way out of my league.
That's right, man. All those websites you just showed off are the great work of my wonderful wife. She's also our chief operating officer in the business. So, hats off to our two ladies. To answer your question, the co-author I wrote that with is a wonderful person named Monica Sawyer, and she has got a podcast by the same name. And she was telling me that, Mark, women typically don't get as great interest rates. They don't typically get as much access to capital as men do overall. It's the whole, glass ceiling scenario. And income, if it's lower, it's going to mean lower mortgages and everything else is impacted that way, right?
Okay.
So again, if you're your own source of financing for your real estate deals, why do you need a bank in the first place?
Right. Yeah.
So we've got a lot of our clients who borrow from their policy and either use it for the down payment or as a cash purchase. And again, the policy is still growing on the $300,000 or whatever.
Yeah.
And you got the rental property, right? And you got the tax advantages of the real estate. So it's an incredible nitro and glycerin combination deal there to put those two assets together.
Yep. Provided you get the renter in there.
That's right. Yeah.
We all know the 3 T's, right? Termites, toilets, and tenants that can give you a heartache.
Trash and taxes. We can keep going there with those T's, man.
We keep going on forever. But I appreciate your time. I'm going to put up here one last time. To get in touch with Mark, go to lakegrowth.com/schedule. And anything last parting words for the wonderful people listening to this program?
I'll just keep learning. Guys, give Jeremy a 5-star review on this podcast. It's awesome, and I love the StreamYard that we're working on here right now. It's beautiful. So give this guy all the props you can give him, and keep up the good work.
I give myself a like.
Love it.
There we go. If you don't put yourself over, no one else will sometimes. But thank you for those nice words. Stick around for a second. Just want to tell my people goodbye. Appreciate everything and everybody who puts the time and attention into this program. The point is to bring on the best people to tell you and me about how to get 1% better. Mark surely did that today. If you are a podcaster or you like podcasts, you need to get Pick Cherries. Go to Pick Cherries on your Android or your iOS shops. Download it. This will let you pick the best 60 seconds or the most interesting part of your podcast and share them like never before. Put them on your social media, text them, email them, bring them to your work teams and play just the 60 seconds. From there, you can play the entire episode and see all the other episodes that the podcaster has. Pickcherries.com or go to your stores there, and I want you to go pro.